You're welcome back. Now let's look at accounting for partnership dissolution. The main account around which the dissolution entries are made is known as the realization account. It is this account in which it is calculated whether the realization of the asset is at a profit or a loss. The accounting entries needed are A. Transfer the carrying amount of all assets to the realization account by debiting the realization account and crediting the asset account. B. Amount received from disposal of assets. We debit the bank account and we credit the realization account. C. The value of assets that were taken over by partner without payment. You debit the partner's capital account and you credit realization account. D. The payments that were made to trade payables. You debit the trade payables account and you credit the bank account. The next is the cost of dissolution. You debit the realization account and you credit the bank account. The next is the profit or loss on realization to be shared between the partners in their profit or loss sharing ratio. If it is profit, you debit realization account and you credit the partner's capital account. If it is a loss on realization, you debit the partner's capital account, you credit realization account. And finally is the payment to partners for their final balance on their capital account. You debit the partner's capital account and you credit the bank account. In the next video, we will solve a complex question to demonstrate the accounting for partnership dissolution. Thank you very much. See you in the next video.